Hello everybody, welcome to 5 Minute a Day. That's 10 minute a day, it makes no sense. 5 Minute a Day Trader. On this channel, we spend 5 minutes. Most days, I probably get somewhere between 2 and 5 days a week to record, to find some trades, spending just 5 minutes. Typically, these episodes, I really try hard to keep them under 10 minutes. But, sometimes we go a little bit over, depends on kind of the situation. So, what we do is I'm right here in Tasty Trade. You can sign up to Tasty Trade in the link in the description. And every day I'm trying to find some trades, typically short or medium term trades, and typically selling puts or call spreads. And just trying to create a portfolio that doesn't stress me out. Now, that can be particularly useful at times like this. It is April 7th. It's around 11:30 a.m. Eastern time. And the markets have been bonkers over the last few days. And if you're watching this, you probably know that already. Don't need to go into the details of that here because this is really a short form channel where we're just looking at if we can put some trades on based on this. Now, the first thing to check at times like this, when the market is really being insane, especially when it's coming down, is to check out the VIX. So it's VIX. This is the instrument that monitors overall volatility in the market. And we can see here that it is extremely high, right? It's come down a little bit since open today, but the VIX is at 50 right now, which if we look at, even these recent peaks, 25, it's bonkers high. Now that means that options are going to be generally across the board are going to be expensive. And when options are expensive, it's a good time to sell them. Now, as I talk, I'm going to clean my glasses here because we got to dig right in and see what we can find. Now, the other thing to think about is when we have these big down moves, it can be very stressful, and we can be unsure of should we get in? Should we not? What if it continues to go down? Those are all valid emotions and things to think about as we go through here. Now, we are getting fairly close. Let me just jump into SPY. We're getting fairly close to expiration. We're only 10 days out from expiration. I haven't checked my positions in the last couple of days, but I'm going to guess that many of them are through the break even. I'm going to be hurting on a lot of positions. So that means I'm probably going to have to roll things out to this next expiration in May, the 39 days. So that's probably what's going to happen in this episode. So I'm going to spend some time there. While it doesn't necessarily help us find new trades, it's a really great exercise to go through because it's a way to mitigate stress and a way to sort of realize, it feels like I'm losing right now, but actually, if I just stay the course and try to keep the emotions down, I'm going to be okay generally. And the other thing with selling options is you have a lot more room to be wrong than selling options when you just straight up buy stocks or buy options. So when trades go against you, there's ways that you can mitigate that. And it sounds kind of like a cop-out, but essentially lose less, in other words, than you would otherwise. And sometimes not lose at all, depending on the situation. Now, having said that, I'm going to sort by symbol here instead of let's just do my standard percentage change just to kind of see where we're at. So, it's going crazy on me there. So the emerging markets is down a bunch, right? See, it's down here to a historic low. So this could be a good underlying to sell some puts in. It's at, because it's so cheap, it's at $39. So not a lot of risk. One of the key things that is important to me on this channel is making trades tiny. You always want to have cash available. The beauty of having cash available is when big moves happen like this, you can take advantage of them because all your capital isn't locked up. So this could be a good one to think about. It's low cost. If I were to open between 1 and 5 contracts in the emerging markets, EEM, if I were to say sell this 37 delta put, its IV rank is this 200, essentially this big change blows out IV rank. It almost becomes invalid at that point. But here I'm only got a max loss of 3,500. I'm collecting $1. So I'm going to go ahead and put this one on. It's such a small trade, doesn't kind of stress me out. So this is 0407. I'll try to be as quick as possible here. I know the real purpose of this channel is to kind of get quick hits under 5 minutes, but when there's things happening like this, it might take a little longer just because there's so much to do. But this one kind of out of the gate, it was $1.08. That would make my break even around 36 roughly. And the expiration there is May 16th, 2025. So like in terms of what I said a moment ago is like, if you're stressed out, like markets might continue to go down. What's a way I can mitigate that? Well, I can mitigate it by, instead of, if I'm not 100% confident, I feel my emotions getting the better of me, I might not be creating positions in SPY. Like the same position, not the same position, but approximately the same type of position, I should say. In SPY, the 30 delta there has a $45,000 max loss as opposed to what I was looking at in EEM. So it's just something to think about, right? Same deal kind of with USO. One of the things that's interesting is these correlations. I talk a lot on this channel about correlations, how we want to have trades and underlyings that don't correlate to each other, so they're sort of independent trades. With these big down moves, a lot of that correlation kind of goes out of the window. Everything like kind of snaps together sometimes and becomes correlated. That can be true with everything except for things like the bonds. It's unusual that the bonds start to correlate as well, although they've been a little wonky. We'll look at the bonds here in just a second. But USO could be another good one. We look at USO, it's down here. It's not like hitting historic lows like some of the others are, right? So this could be an interesting one. It's a $65 underlying. 39, let's take a look. Its IV rank is up in the 70s. So it is kind of decoupled a little bit from some of the other things in the market. So I got a $5,900 max loss, collecting $1.75. So I'm going to go ahead and put that one on too. Let's do that. And we'll see. Something in this channel I really try to be is transparent and just like, hey, I'm going to put this out there. I'm using my own money, trying to be as transparent as possible. If I lose, you're going to see that live on the channel. So my break even there is, I'm just going to kind of round this off, but it's approximately 59.50. I'm kind of rounding up at it a little bit. And I will say, I'm not going to put too many more on here because, I've only got so much capital available, right? IYR, this one, let's take a look. This is the real estate. This is, again, not historic lows. I do have, I think, I've already got 2 positions on in IYR, so I'm not ready to add to that yet. I do have some positions on in USO as well, but they were like way out of the money, and it's a cheap underlying, so I'm not too worried about it. But IYR, I have enough exposure in there already that I'm not going to add to it, but that could be another one of interest. EWZ, good old Brazil. Look, Brazil's moving very differently, right, to the rest of the market. Its volatility is still up though, and it's cheap. It's a $24 underlying. I don't think I have anything on in EWZ. So let's take a look in there. The 39-day EWZ. We got $26. Let's go straight in for the third. Excuse me, I was reading the deltas wrong there. The 34 delta is at. God, it's kind of I'm almost, what is it? What's it? It's 24, so it's about $1 away from the money. So yeah, look, 2,500. Not collecting a ton, but could still be an interesting trade because this is so cheap. I'm going to go ahead and put this on too. That's mostly because I just don't have anything on in EWZ, so I'm not worrying too much about exposing myself to movement in there. So it's $74, excuse me. So I'm going to round up a little bit on this one. Roughly my break even, $22. Let's see, TLT. Now typically, look at that. Typically when markets are really going down, the bonds tend to go up, but like we're not seeing that a whole lot here. So I'm going to skip over TLT. If I were willing to risk, if I had a little bit more capital available, like it's unfortunate that this down move fell, several days out from expiration. If we're a little close at expiration, I was taking positions off. I might consider putting on a TLT position here, but I'm just not because I don't have enough. The markets, I'm plenty of exposure to the markets already. But again, we got some. Let me just take a look at the markets to see what might be the best trade in there. I mean, I'm a lover of IWM, GDXQs, and let's take a look at where's IWM. Might be the diamonds just based on the downward movement today. Diamonds has the most downward movement, has a high IV rank. This isn't like a perfect science, but one way to think about it is to look at the gain to max loss. So DIA is, $9.50 for $35,000. That's roughly at the 30 delta. So $9.50 for $35,000. IWM is $5 for 16,000. So it's about half the max loss, but less than half. So the gain. So I'd go with IWM potentially over DIA. Let's look at SPY. At the 30 delta in there is way up here. Where are you at? 30. The beauty of it is SPY is so liquid. Like you can do anything you want in here. So this one's interesting. It's you're collecting quite a bit more than DIA, but not a ton more risk. So SPY is something I'd consider as well. And then what have I missed? The Qs, right? Let's take a look at the Qs. 39-day, that 30 delta right there, 38,000 to $13. So actually the Qs might be the sweet spot. You know, you're collecting $13 for 40. That one's max. So I think if I were going to put a trade in the markets, I'd probably go with the Qs today. But I'm not going to put any on in there, so I'm not even going to record that. I have plenty of exposure to gold, to the metals in general already, but that's another interesting one. Like typically, you know, we look at the correlation of GDXJ is 50, SLV 60, where's GLD 33. So these are low correlation. But look, when we have these big down moves, they snap right in. So correlations aren't a perfect zone. I have plenty of exposure to the metals already, so I'm not going to open any new trades, but they're also not hitting these like historic lows either. Look at the euro down from a high. And what do I miss? UNG, oh my good friend UNG. UNG is a little bit decoupled, like not huge down moves there. That's another cheap underlying. Let's take a look at UNG and see. There's a 27 delta. So that's interesting too. Do I have any UNG positions on? I don't. So I'm going to put UNG on as well. So here we go. I'm putting 4 trades on. How am I mitigating for these big moves? I'm putting my cash into cheaper underlyings. What am I doing there? The 18 strike, and I'm collecting 70 cents. So, you know, give or take, my break even 17 there. And we'll see how these do. All right. So those are the trades I'm going to put on today. Let me quick run through how I'm losing. I'm sure I'm going to be losing a bunch on these, but let's see. You know, I could be wrong. Let's take a peek here. So GDXJ, I have the 45 and the 46 put. They're actually still doing great. So 45 is at 27 and the 46 is at 67. The markets are super wide, so those aren't really even valid. They're essentially winners at this point. And then I've got that call spread at 59.64. That thing should be doing well. So it's 59 to 64 on that call spread. That's down to 7 cents now because of this big down move. I open at 94. I'm going to close that bad boy out. So that one, I'm going to close it. Let me lock in that. Oops, that didn't work. $87. I'm going to lock that in. So I'm going to close out my GDX. It's going to release a little bit of capital there. That one's a winner. Where's my strike through? There it is. Okay, so I closed out that call spread in GDX. So there I've locked in a winner. That's awesome. Good deal. Feels good to win on a day where I'm definitely going to be losing. Let's take a look at EEM. EEM, I have that 37 put. It's still well out of the money. It's at $1.09. So look at that. It was $12. Should have closed that guy out last week. Now it's at $1.09, but I'm still miles away from my break even. IWM, this one's got to be hurting me, right? Like, let's take a look here. Got to be weighing the money on this, surely. I've got the 194 and the 203 in IWM. So the 190, yeah, so I'm way in the way. So I got to roll these out. So let me take a second here. So the 194 is at $17.44. So where am I at here? Current price, $17.44. Oh, that was the 194, $17.44. And then the 203 is at $24.10. So yeah, I'm gonna roll these guys out. So give me a moment here to do this. So the 407 and IWM. So basically what you do when you roll is you buy that back at a loss, but then you sell out the same typically, but sometimes a different strike out in the next expiration. So let's take a look here out in, oh wait, I was looking at the wrong, sorry, I was looking at the wrong expiration there. I messed that up, didn't I? Did I mess my other ones up too? That's okay. I'll worry about that tomorrow. We'll just fix that tomorrow. But let's make sure we got IWM correct. So it's in the 10-day is the 194 and the 203. So the 194 and the 10-day is 1566. I kind of messed up there. And the 203. This is kind of where I wish I had everything in one account, but I just don't. Like bouncing around between all the different accounts is really hard, but it would allow me to just look up how much it is and just run the roll and let everybody know where we're at. So basically what's going to happen here is I'm going to lock in this loss. So this is going to be, I'm going to lock in these two losses. Okay. And then, but then I'm going to get here at those same strikes. I'm going to open up sell two. So I'm buying back those ones at a loss, and then I'm going to sell. Hopefully I'm going to sell them for more. So let's find out where we're at here. So we're going to go out in time to the 39-day, and we're going to sell the 194 and the 203. So they're way in the money. So there's this, the 194. We're going to sell that for 1733. And was that the, that was the 194. God, I keep making that mistake. And then the 203 sell for 24. And now when I fill these like after I'm done recording. I go in and get these filled. So I'll do that. You know, the price might be slightly different, but you know, not significantly so. So let's see. So the 194. So yeah, so there we see. So what I'm doing is I'm buying back the 203 for 1977. I'm selling it for almost $500 more. So I'm collecting another money. I'm basically collecting money. I'm getting paid to roll that out a month, roughly. And then here, same deal. I'm going to be paid about $500 more. So I'm going to just for the sake of time, I'm going to calculate my break even later in the day. I'll come back and do that. So that's what's happening. So I'm locking in some losses, right? But I'm collecting another sort of $600-700 to mitigate those losses, and then I'm waiting for the market to come back. And that's gonna be pretty common. This could take 1 month. It could take 12 months. We'll see. We'll see what happens. All right, USO. I'm gonna move pretty quick here just because of the sake of time. So USO, I had in the 10-day. Make sure I'm getting in the 10-day here. So I've got the 67 and the 68. So those are just in the money. So I'm going to have to roll these two. So it's going to take a little bit of time here. So it's 288 for this. And the 60, that was the 67. Ugh, keep doing the same wrong thing. 67 versus 68, 330. So I'm going to lock in those losses too. I'm going to roll those guys out. So let's take a look what we can get in the 30 and the 39-day for those same strikes. So it's the 67 and the 68. So I'm going to sell the 67 for 430. So it's the 67 and the 68. 67 for 435 and the 68 for $5. So you can see the difference there again. Like the 67 as an example. Buying that back for a loss of 155, but I'm collecting for 35, so about $300 there. So that is a good roll too. So the main thing, all we're trying to do when we roll is just collect some money. That's it, and that just gives us some more time to be right. And that's what we're working on. So IYR is, where are you at, my friend? Where's IYR? Where'd you go? There you are. IYR, I have the 91, so I'm going to have to roll this guy too. That's at 475, and that is the 91. So let me go ahead and roll that guy out. And what this is doing is it's kind of forcing my hand for the next month, which is a total bummer. Like I would love to win every time, but hey, that's not reality. So we'll follow these and we'll see how we do. So I'm going to sell it out. What are you doing here? I'm going to sell out the 91 620, and I'm going to fill in those break evens at a later time. So there we go. There's IYR. locking in that one there. And what's next? GDX. I had those call spreads in GDX. Those might be closing out. 10-day, I've got the 44 and the 49. So it's the 44 and the 49, and the 10-day is at 54. So that one's doing great. I'm not going to close it out, though. I'm going to keep that going. I want to squeeze everything I can out of these trades. And then 46 and 51. That's at 12 cents, that one. Obviously, those are going my way. And then I got this last little squeaker here, another IYR. I should have coupled those together. That's actually out in the 39-day. So there I've got the 90 put with the 99 call and the 100 call. So that's at 529. So this one I'm not going to roll yet. I'm just going to leave it here because it's out. It's at the 39-day. So I'm just going to sit on that one. I'm going to wait till the 74-day is more in the like 45-day zone. So that's it. Let's take a look. This is going to be hurting us. Yeah, look at that. Down 3,600 overall for this month, which is, that we're not going to win every time. I can tell you that based on the capital outlay versus, I have accounts like my other retirement accounts that, are just straight up in market ETFs. The percentage that I'm down on those is significantly more than what I am in here. So this can mitigate loss, but also by rolling them, we're getting a little bit more time to rewrite. So thanks a lot for watching. We'll watch these over the next month, and we'll see how we do. Talk to you soon.